Thursday, September 18th, 0806 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Yesterday was one of the big events this month. Federal Reserve had the meeting, they voted, and the majority approved, and it passed. The overnight lending was reduced by 1/4. And then you had the individual that went against them that was recently appointed and chose to put their vote in for 2/4 change. Well, again, the majority is how it worked. It went down 1/4. That alone does not make mortgage rates go lower. Those are individual financial instruments, individual agencies. It does not make homes less expensive. We still have inflation continuing, making materials and labor, and also the big part of it, the transportation, the embedded cost to transportation of items from fuel, energy, and insurance. That being said, this month we have another big event that's coming soon. It's already in progress, but the deadline is September 30th. Congress must pass a balanced budget bill, or the federal government has agencies that shut down. The leadership of Congress is the same political party that's the leadership of the White House. And of course, a lot of infighting. The market anticipates they're going to increase spending, increase the debt. That's not good for the economy. So let's go look at the sectors in the S&P 500 if you don't know. The S&P 500 is is the most important stock index for the markets because it's very diversified. So it's the go-to to compare your equity portfolio to. There's 11 sectors in the S&P 500. They don't all represent the same percentage. Nope. Technology is one of the largest, or is the largest weighted average sector in the index. You might know some of the companies in here. Apple, Amazon, Microsoft, Nvidia. They made a new high for the year. So you see on the far top right, new high for the year. That's good. This candle and each of these will be done 4 p.m. New York time Friday. Healthcare, underperforming. Again, look at this. This is the yellow horizontal line, the high of 2024, and this is the high of 2025. Currently, it's inside candle. It means indecision has to take out the higher low of the prior candle. It's struggling. No surprise. Political party that's in power, typically this sector is underperforming. Financials, all-time new high. Again, I told you part of the embedded costs, insurance. Insurances are part of financials, same with banks, mortgages. Yep. Consumer discretionary. Look what we did. We took out the high of last year, all-time new high now. So let's remove that and we'll update this. Yep, way overdue. It finally took out the high. So it's been underperforming until now. Oops. Let's try it again. There we go. So breaking news, again, I just showed you what most media outlets are not showing you. Which sector just made the all-time new high? And taking out the high of last year. That's important to understand. This sector. Communication services also made a new high for the year. Outstanding. It's a better thing when you see majority of them are making new highs instead of just a few of them. So getting much more balance of a market. Industry. Underperforming. Yeah. Look at that. Inside candle for a week. Indecision. That's possibly distribution. Consumer staples also way below the highs of last year. And look what it did. Lower high, lower low. It's trending down. Still selling off. No surprise. Inflation is hurting the economy. Inflation does not go away in one day. Inflation typically gets worse before it gets better. And worse for how duration? It could go for 2 years. It could go 18 months. Time will tell. Energy below the highs of last year. Utilities still below the high of this year. Real estate, look at this, way below the highs of these prior years. And look, here's the high of this year. So here, XLB, basic materials, inside candle for the week below the high of last year. And the S&P 500, the stock index they're all part of. Look at that, new high, all-time new high. If you've been following my videos for a while, especially the ones on the equity indexes, you're already situational aware that the S&P 500 is comprised of several indexes. The NASDAQ 100, the Dow Jones Industrial Average, the Dow Jones Transportation, the Dow Jones Utilities, the S&P 100, all part of this stock index. That being said, 9:30 a.m., 09:30 a.m. this morning, New York time, if the indexes gap up this morning, I'd be looking for a bearish day trade. I'd be looking to taking bearish swing trades. Be very concerned. You can have a lot of short covering. If you don't know what short covering is, I'll talk about it further on my Patreon page. That could be one reason why we have a gap up, because many people likely left their positions on yesterday in the equity market that were short, and there's a short squeeze. They would be closing the positions, making a lot of them probably margin calls. That does not mean there's new buyers coming in. And that's why I would be looking for a bearish opportunity. Thank you as always spending just a little time with me. That's it for the video. Thank you for watching.